back to Small Cap Power Studios here in Toronto. I'm with Jeff Weniger, the Asset Allocation Strategist at WisdomTree. Jeff, thank you so much for joining us today.
Thanks, Angela. Glad to be here.
So give our viewers a quick introduction to WisdomTree.
Yeah, well, WisdomTree's been in Canada for 3 years. It's a business that was around in the States, one of the early ETF companies back to 2006. It's about 13 years at this point. Entered in the summer of 16 here in Canada. We're at this point the 11th largest ETF provider in this country. And it's all ETFs. It's never been mutual funds. It's just the name of the game, classic WisdomTree.
Jeff, why is it better to have more ETFs in the market? Why is that an advantage?
Well, it's one of those things where there's the big question mark: what stage is the ETF business in terms of its development? Is it still early days? Is it middle aged? And the reality is, there's still $10 in mutual funds for every $1 in ETFs. And so, imagine if you're at WisdomTree and you're out there singing the praises of ETFs every day. What is the end game? Is it really to go duke it out with other ETF providers, or are you all kind of in it together, showing the value of the ETF structure? There's tax advantages, intraday liquidity, all of these advantages that we've been saying for a quarter century with respect to ETFs. It's not about trying to steal market share within the confines of the 160 billion. It's about really attacking the 1.5 trillion that's still in mutual funds. Mm-hmm. And if we can collectively, 3 dozen of us, take some proportion of that market share. Think about what that's going to do to aggregate MERs in this country. People are still paying triple-digit MERs. That's remarkable, given the fact that there's 800 ETFs by well-respected brands. I mean, it's not, mom and pop's ETF company doing this. Mm-hmm. If you look at those 3 dozen, almost all of those 3 dozen are household names. And so, if other players are in there, going and working across the country, going on television, having meetings with advisors, saying how wonderful ETFs are, go get them, Tiger, because I think it's going to end up being really positive for the whole industry. Mm-hmm,
mm-hmm. Now, we've just seen a new relationship announced in Canada between RBC and iShares.
Yeah.
Can you give us a little background on this and perhaps what it means for the industry as a whole?
Yeah, I think there's an example right there. Look, you have 2 of the most gilt-edged brands right there. They're going to be a competitor. iShares is the #1 market share ETF provider. RBC has that wonderful brand. It's so well respected in Canada, and they're going to join forces. And I think one of the positives about it is it's a big neon sign from RBC that's saying, hey, look, the future of the business is going to be in ETFs, and they want to get behind it. And so WisdomTree welcomes the expansion of their business, and we wish them the best of luck.
How would you suggest or advise to incorporate ETFs in a portfolio?
Yeah, I think it's one of those things where you want to make sure you understand what you have, and you don't need to use a million different products, and all you do there is confuse yourself. It's kind of like my old days in private wealth. You get a client statement, it's just this laundry list of stocks, and you can't even keep track of what you own. So I think you have to put together an asset allocation. That's one of the things we specialize in, is the key components of an asset allocation. Core Canadian equities with our it's called DGRC, that's the ticker of it. That should be one sleeve of it. You want to make sure it's not 60 or 70% of a portfolio, which is something we commonly see. Canadian equities are 3% of the global order, and so it should be something much smaller than what's standard. But you need to have also core products for U.S. equities, and you need to think big picture, long game overseas. Even if your horizon is relatively shorter, I think we need to acknowledge as a society that the 21st century is not necessarily going to be led by the G7 economies, that there's 4 billion people in Asia, for example, and you need to invest in emerging stocks, and as well as the rest of the developed world. Let's not forget European Union and Japan as well. So put them all together in a portfolio.
Well, Jeff, thank you so much for taking the time to speak with us today.
It was a pleasure, Angela. Thank you.